In this video, I explain exactly how to trade meme coins on Base. I'm gonna show you what to do in order to start trading them. I'm gonna also talk about how to look for trades, how to get in early, and also an easy trading strategy that anyone can follow that drastically decreases your risk and increases your chances of success. Also, can you get rugged on Base? I'm gonna talk about that as well. So this is going to be a bit of a longer video, so let's just dive in. Base meme coins, just like Solana meme coins, can be easily found on Dex Screener. You can see here, you can go to the left side corner of Dex Screener, click on Base, and you'll see them all listed here. But Base meme coins are actually a lot different when it comes to trading from Solana meme coins. There's a lot more things you need to be looking out for. But what is Base exactly? Where is it? And how do you get money on Base? Well, Base is an Ethereum L2, which means basically you're trading meme coins using Ethereum, except it's on Base chain. It's not on Ethereum mainnet. Now, the reason why a lot of people actually like Base is because unlike on the Ethereum mainnet, the gas fees on Base are exceptionally low, and transactions are fast, similar to Solana. Also, creating meme coins is relatively cheap and it's easy to trade them. It's definitely becoming very quickly a trading hotspot for degens and meme coin traders. So right now I'm going to show you exactly what you need to do to start. I'm going to show you how to bridge your Ethereum to Base so you can get started. And I'm going to also show you a few different options of how you can actually get your money on Base. Some of you might be limited in centralized exchanges, so I'll just provide all the options for you. First option is you can just use Coinbase. This is literally Coinbase's L2, so you should literally just be able to go to coinbase.com, log in, right? And there should be an option to just withdraw Ethereum directly to Base. I believe it's also possible on Binance, except I wouldn't recommend it because I haven't tried it. I won't show you how it's done on Coinbase because actually my Coinbase account is banned, so I'll just skip right ahead to the next option that you have, which is bridging to Base from the official Base website. You simply go to base.org and you click the button bridge, right? And here you just need to connect your Ethereum wallet, which would be MetaMask. Right here, I'm just going to go to MetaMask website, metamask.io, and you just install it on your browser. We got the MetaMask installed. Now let's say you want to fund your MetaMask wallet. Well, what you would do essentially is you would go to any centralized exchange and you would copy this address right here and make sure that you're on Ethereum mainnet, right? And you send Ethereum to that address. So once you have the Ethereum, you connect your wallet here, right? Connect. Now that it's connected, you accept their terms and conditions, right? And let's say you have one Ethereum and you proceed through this right here. But there's another way which is actually even more easy that I prefer, and it is using changenow.io. You can basically send any crypto here on this website right here, and they're just going to exchange it for any other crypto that you want. So let's say you want to exchange 0.09 Solana for the equivalent in Ethereum on Base. So what you do here is you go to Solana, you select Solana on the website, you choose your amount, then you enter Ethereum, and you have to select the one that has the Base icon. And then you're going to see here Ethereum Base. You select that one and you press exchange. Once you press exchange, you have to paste your Ethereum payout address. And how you get that is basically you just open up MetaMask and you just copy that address right on top. And before you do that, you actually also have to enable Base on your wallet, because by default you're only going to see Ethereum mainnet. How you're going to add the Base mainnet is by pressing the Add Network button. It's going to take you to this page right here. You're going to find Base mainnet right here, and you're just going to click Add, and you're going to approve that transaction, and it's going to be added to your wallet, and that's it. And then you go back and you finish that exchange on changenow.io. So let's just finish this up and let's get this started. Okay, I paste the Ethereum address here. So right now we're just going to send Solana to this wallet right here. All right, it's been sent to them. We're just going to wait until they send us the Ethereum. All right, only took about 3 minutes and it's already in my wallet, so we can proceed. So now that you have money on Base, how do you start trading? Now, I'm going to be honest, right now the markets are a bit shaky, so I'm not sure if trading meme coins is the best move. There's a bit less volume than usual and there's less bumps happening, but the time will come when memes start popping off again. I mean, there's still memes popping off to this day on Base as well, even though markets are shaky. Like, for example, BSB. I made a video about this token yesterday, and it went up today like almost 100%. So even if you decide to stay on the sidelines while the markets are a bit shaky, you can still implement this strategy later on. This strategy really does work the best when the markets are favorable for meme coins. By the way, I've basically made a meme coin trading guide. Now, it's nothing crazy, but it does include everything that I'm going to be talking about in this video. So if you guys are taking notes, you can just look at this file right here and see what I was talking about in text. Now, I suggest if you're going to be reading this, you also watch the video, because I will be referencing a lot of the points that are made here in the video and diving in more detail into each of them. The link is going to be in the description below. So there's two ways you can trade on Base, and the first one is holding high conviction plays. Generally speaking, you can buy tokens on Uniswap for Base. If you're just buying and selling for a bit longer term, it's probably not a bad idea to just use Uniswap. So you go to Uniswap and then you switch to Base network. You connect your wallet, you switch to Base network. What you're going to do next is you take your token that you want to buy, which in my case would be BSB. You copy this. This is the contract address right here. You copy it. You select the token right here, right? You paste the contract address. You select it. Press I understand, and it's going to be available in your wallet. Now, all you do is you type in your desired amount that you want to buy. For this demonstration purposes, we're just going to buy $8, right? You're also gonna need to adjust the slippage a bit, because meme coins usually are more volatile and your transaction might not go through. So I would suggest putting like 2 to 3% slippage. So you set the slippage, press swap, confirm the swap. You can see here the estimated fee on Base is only 7 cents. Unlike on Ethereum, it would probably be like $5 or even more if the network is very busy. So you just press confirm. So now you have those tokens right here, but you do not see them in your wallet just yet. You need to import them in your wallet. So what you're going to do is you're going to press import. You're going to paste the same contract address, and you're just going to press next, import, and you're done. Right now you have your tokens right here. And if you want to sell them, you basically do the same thing. You go on Uniswap, you enter the amount you want to sell, press swap, accept it, and you're done. Pretty easy and pretty simple. Generally speaking, this is how you buy tokens on Base. But there's a lot of things you need to be looking out for before actually finding a token and buying a token. So before we actually start diving into these strategies that I'm going to be talking about, I'm going to need you guys to get familiar with the security measures that I am implementing myself before buying any tokens. Now, this is very important because meme coins on Base can have actually a lot more issues than just it being a rug. Like, for example, on Solana, a token can just rug pull, right? That's the worst that can happen usually. On Base, it's a bit different. On Base chain, the developer can turn off selling, for example. They can set the sell tax to 100%. So when you try to sell your tokens, you end up losing all of your money to the tax. And there's a lot more different weird small things that the developer can do, and you won't see them usually right here. For example, if you go to new pairs on Base, you see all these new pairs, right? Let's check them out. Let's check out some of the new pairs on Base. And I'm just going to show you what I'm talking about. And what's going on here, you can't really tell what's going on here, right? It says there's no issues. Looks all good, right? Quick intel also shows it looks good. Let's look at the next one. It just shows that it's all good each time. This one has one issue. Ownership is renounced. It's not renounced. Here, it's not open source. So how do you look out for these things? Well, you're going to be using a few utilities that I'm going to be talking about here. One of them is Token Sniffer. And it's a pretty simple app that you're going to be using each time before you buy any sort of tokens on Base. And you have to do it each time because it really is sort of sketchy sometimes. It shows up that the token looks good, but in reality, it's a scam. So let's see, for example, this token. It shows that it's all good right here. Let's see what Token Sniffer tells us about this token. Boom, it says 0 out of 100. Selfie is 100%, and it contains a signature of a serial scammer. But right here on Dex Screener, if you look at it, it looks all good. You can't be looking at Dex Screener if you're, for security purposes, if you're going to be buying on Base. Another thing is liquidity. You cannot really know if the liquidity is locked for Base tokens if you just look at Dex Screener. So I can show you an example. Boomer token on Base is pretty much a huge runner. It's at $30 million market cap, and it doesn't show that the liquidity is locked here. As a Solana trader, you would think, like, what's going on here? Like, they can just rug pull at any time. But in reality, if you copy the contract address and you paste it into Token Sniffer, what you're gonna see that 99% is actually burnt, so they cannot rug pull you. This coin is actually safe. You know, dex screener security information about tokens is a bit misleading, so you always have to use Token Sniffer. Now, let's say, for example, I want to buy some BSB, right? BSB token based street bets, right? I am invested in this token, and I think this one's gonna go really hard. So let's say I am a new investor and I'm like, what's up with this liquidity? Is it locked? Let's copy the contract address and let's check it out on Token Sniffer. So you can see here 97% of liquidity is burnt, so it's safe, and the score is 100 out of 100. So the next thing you should be looking at is bubble maps. This is a simple sort of mapper which checks the top wallets, and it checks if they are in some way connected. So you can see here there is a wallet that holds 1% of this token supply, and it's linked with two other wallets that also hold 0.1 and 0.2% of the supply. But yeah, this is definitely still worth looking at to see if there's maybe like some sort of syndicate of wallets that are just holding up a 30% of a supply. Just take a look, you know, it doesn't hurt to have an extra security measure in your pocket to make sure that you're not going to be losing all of your money trading something, right? Now I'm going to show you my exact strategy, how I trade these meme coins on Base. There's two key ways you can do it. Number one way is by having those conviction plays. Those are the plays where you hold out a token regardless where it goes because you have a very high conviction and you hold it for 10x or even more, like 50 or even 100x, right? Because you have high conviction and you know that it's going to find your target value at some sort of point this year, for example, right? And there's a lot of things you should be looking out for to find these conviction plays. But let's just say, for example, that you found a conviction play. For example, me personally, my first conviction play on Base is based street bets. I would confirm, for example, my target for this token is $100 million market cap. I set that target in my mind like that. And I remember, 100 million, I'm not selling before. I'm not short selling this call. And you just buy it in and you wait. And that's it. That's basically what it boils down to. And there's a few key things you got to be looking out for. And I've actually compiled them in a little sort of a list here that you can take a look at. There's like a few key principles that you got to be sort of thinking about. You have to turn off your emotions and be logical, right? You have to think, does the token actually have potential or is it mediocre, right? As I've explained here in an example, if you are a nicotine pouch user, probably some of you know the brand Zyn, you might look at a coin that's called Zincoin and you might think that this is very relatable and it's going to push to millions. But what you fail to realize is that Zyn is actually just a nicotine pouch brand and it's not really used globally and it's not really available in every country. So will it actually capture attention of masses, or will it just capture the attention of other Zyn users? So logically it would be the latter. Another key thing you have to look at is that something that's like easily liked, recognized, or funny to people, For example, Base Street Bets is I would say it's very relatable to most meme coin traders and most degens in general. Everyone in the trading space know what Wall Street Bets means, right? Those are the guys that were short squeezing the GameStop stock back in 2020, right? It's an OG meme, and like the key originality aspect in this one is that it's based Street Bets because it's on Base, right? And it's blue. It has to be original as well. Perfect example, Dog with Hat. Dog with Hat pushed to billions, while all of the other with meme coins, for example, there were like tons of different just like variations of with something, right? Like dog with pants or something like that. There were a bunch of tokens like that, and they never surpassed like a few $1 million in valuation, right? And you also have to look at the socials. What the team is doing. Are they delivering on their promises, right? Are they active? For example, Dog with Hat, as I've mentioned right here, before they pushed billions, they were constantly engaging in Twitter with different creators, and they were constantly like putting a hat on their profile pictures in Photoshop and posting it, and then tagging these creators, and these creators would notice these, and they would also put that profile picture, they would shout them out, and that's how they gained their popularity, right? You have to also look at the roadmap. Like, is it updated? Is it constantly updated? You know, like, is there something that's outdated? The chances are, if there's something that is outdated in the roadmap on their official website, probably means that the devs aren't taking the project as seriously. One of the most important things which you have to look at is, has the token already had a huge pump? And what I mean by a huge pump is basically, has it already surpassed like $50 million market cap? Because if it's at 1 million or sub 1 million, or maybe even sub 10 million market cap, there's a lot more upside that it can do than if it's just $50 million market cap and it's a second class meme. Where is it going to go? Is it really going to go to $100+ million? Probably not. Or something like WIF. This coin is valued at almost $3 billion. Do you think there's going to be another 10 billion or $30 billion that are going to just come into dog with hat and push it another 10x? Probably not. I mean, anything can happen in the crypto space, but this is just a very unlikely bet. For it to be $30 billion, it would be at like top 10 of all cryptos. That's one way of trading. And you have to realize, if you are holding these high conviction plays that you are really convinced that they're going to go somewhere, right? You really got to be ready to stomach 80% losses, because that can happen. For example, your coin can easily go down 80%. If you buy in a bad spot, it can easily go down 80%. And if after a few months, it can pump 50x, you know? I can show you a perfect example, Chonky. It's on Solana, but the concept is the same. What happened literally a few months ago, Chonky went on a huge run up, right? If you even bought here, you would see a downside of about 80% until this point. But what happened from that exact bottom, it did a 12x to its new all-time high. And if you look even before what happened, Chonky was released, right? And it went down pretty substantially, actually. If you bought in one of these peaks, you would have seen a 60 to 70% drawdown, and you would have had to wait like 7 days until it did something. And then it pushed hard, you know, it pushed like 50x, I believe. From that point, it pushed like 50x or even more. I think it's 300x. Yeah, so if you can stomach some sort of losses on your high conviction play, it can definitely play out very, very well for you. And the second strategy doesn't involve hodling or anything like that. It's not about high conviction at all. It's more so about short-term trades, and it's about looking at the charts, right? You look at the charts, and you look at the charts for setups. So what you would do is you would go, for example, to the 24-hour trending, right? And you just open up a few of these that look like a nice meme, right? Like Blue Pepe, maybe, right? Doomer, I don't know, Ski Mask Dog. What else can we see here? Andy. Let's just see what's up with those. Now, this strategy basically involves trading the uptrend, getting in on meme coins when they start an uptrend of some sort. So if you see Blue Pepe right here, and you have verified that this coin is safe through the methods that I explained before, what you would do here is you would see, okay, right now it's kind of moving sideways, but there's this swing high right here on the 1 hour chart. We can do it on a 4 hour chart. It depends on your time frame, but I would do this on the 1 hour chart because meme coins move really quickly. Or maybe even on the 30-minute chart, but let's just stick to the 1 hour chart for now, because this right here is the perfect example. So you see this coin right here, and you see it has made a sort of a breakout, but it got rejected, right? It went back down, but it looks like it's done a sort of a higher low, right? So what you do is now you're going to be like, all right, you know what? Let's wait until it pushes above this zone, and then we're going to buy, because that means that it's sort of confirmed that it's moving to the upside. We're basically doing this in hopes that we catch one of these uptrends. So you catch it a bit late, but you catch it on time, so you don't have to wait until it bottoms out all those months, you know. Sometimes these meme coins, they can sit in those bottoms for months or for days, for weeks. That is if you catch that uptrend, because sometimes they do a fake out like this. Like this one, initially looking at it, you would have thought, okay, it broke above, so now I can enter long, and I'm going to set the stop loss right here, because this is the point where if it goes to this price level, it's pretty much invalidated this move upwards, right? It's pretty much entered a downtrend. It's broken below these support levels, which means that it's going to head lower. So it's not going to go higher and you can just sell it. and this right here is a 30% drawdown right here. So if you already, for example, entered this trade like this, you set the stop loss in the point where it invalidates it, and then you just wait. You wait until either of these are hit. But if it goes up, you don't take profit like that. Essentially, you hold your trade open, you keep moving your stop loss up. I'm just going to give you an example. It starts moving upwards, right? Like this. And then it does a big push like this. Boom. Then it does a retracement. And it starts moving a bit sideways. So what would you do in that case? By my strategy, by my book, I would see, okay, so it's doing a sort of a consolidation here in this zone, right? So at which point does it become bearish? I would say it becomes bearish if it breaks below this sort of new consolidation zone. If it goes below, it confirms that it's sort of going to be trending downwards. Obviously, it's not 100% strategy. There is no single trading strategy that is 100% correct. It's not going to be 100% correct. You're going to probably miss out a few times on another pump, right? It might do something like this where it goes down and it just goes up again, right? It can happen, but you don't want to be gambling here. You want to like hedge your bets in a way where you minimize your loss potential and you maximize your profit potential, right? So if it goes to this place and it starts consolidating in a little sort of place right here for a few hours, you just move your stop loss from this low right here, right? You move it to here, and now you're gonna be in a profitable position regardless. Even if it goes down, you're gonna be in a profitable position regardless. And from that point, what is that? For example, if you get stopped out right here from this point, that's a smaller trade. This would be only 25%. Usually when these coins, when you catch a trend like that, it's not really gonna consolidate too much. It's just gonna keep pumping. Like this is a perfect example right here. If you caught this breakout right here, you see it was consolidating. It was having a bit of a lower highs and it looked like lower lows, but then it suddenly broke out, right? It did a higher high right here and it stayed there for like a few hours only. So it went up, right? You bought it in and you're just waiting for the next leg up. You buy it in and you see, okay, it's staying here 1 hour, 2 hours pass, it's gone up, okay, cool. It goes back down to the same sort of level. Okay, fine, this doesn't invalidate anything yet. But if it starts going lower, it definitely does invalidate this trade. But what happened next was it just kept pushing without really much stop, and that ended up being actually a 3x right here. And that's the type of trends you want to be catching with this strategy. I found another great example of this exact thing. So this is based Shiba. It's already an old coin. It was released in 14th of March, but you can see here this is a perfect example of buying the uptrend. So you can see here it was released. It did a initial pump and then it went down actually 82%. Let's say you missed this initial pump and now you're just waiting for your uptrend entry. And let's say we are currently at this point and this is all you see, right? So you see, okay, nothing's really going on here. It's just like, okay, maybe this looks like a little bit of a move up, but then it quickly dumps back down and invalidates this sort of uptrend that you were thinking about. Okay, what's happening next? Okay, it goes up again, but it puts lower highs and sort of weird. It looked like it did lower highs, which is certainly not an indication of a uptrend breakout, right? So lower highs and sort of higher lows, but then lower lows again. And it kept breaking down. So you wouldn't have bought on any of these occasions right here. You wouldn't buy it even here while it's consolidating. And it was actually consolidating. Let's see the market cap. And it was consolidating at a pretty large, pretty hefty market cap actually. It was consolidating at $1 million, which is pretty big, pretty good consolidation level, I would say. Let's say you see only this part of the chart, right? Still nothing's going on. You don't see any big sort of breakout patterns. Moves up a little bit. Okay, this could be a breakout, but it doesn't look like there's a lot of volume coming in. Let's say you want to wait it out just to be sure, right? You wait it out, it goes back down, but it starts moving up. Now, I would say this looks like a great sort of signal, because look, volume has increased. That's a few green candles in a row. It looks really bullish. Let's say you're like, okay, I like this pump. I'm going to buy it in somewhere here. You buy it in, and guess what happens? It starts pushing really hard and you catch that uptrend, and that is a 6x total. Your stop loss in this case would have been probably about 38%, because if you look at it once again, right, if it breaks down from this level and it goes back here, this trend right here that we think is going to happen, like let's just imagine we are back here, we don't know what's going to happen. Let's just ignore this, what's going on here. This trend to the upside that we are about to expect, it's not going to happen. It's sort of invalidated. I mean, it can still happen. It's not 100% foolproof method. Like if you enter just randomly right here, right, and you're like, okay, the trend is about to happen without any sort of strategy behind your buy right here, it would be like seeing a downside of 20%, right, and waiting like a full day until it starts doing something, and that full day can turn easily into a full month or full 2 months, and it can still keep going down more. Like you never know with these meme coins. They sometimes randomly just die out, and that's it. You know, you see them come up, they do their initial pump, and then they start going down. And you don't want to be buying it while it's going down. You just don't. While it's in this sort of a downtrend channel, you don't want to be buying it, with at least with my strategy. In most cases, it actually just keeps going down. You're essentially trying to catch a falling knife, right? Which is not a good thing to be trying to do. Just wait for the confirmation to the upside. It definitely takes some patience to be waiting for such confirmations. Essentially, if it breaks down back to this price, lower than here, then you know that there's a high likelihood that this was just a fake out and it's going to probably go down lower, right? It's going to keep going down. That's the thinking here behind this sort of strategy. Another thing about this is that personally, I am not looking at trading like coins that are above $100 million market cap, because they don't expose you to those potential 20, 50x's. They expose you to a potential 3x. Why do you need that? You can go invest in Cardano and get like a certified 3x by the end of the bull run, you know? We're not aiming for such low numbers here. Let's see this one here. Short term, if you look at this one, for example, Degen, is this on base as well? And it kind of looks like it's on a reversal. It might be a reversal. So I would probably keep an eye on this. Why does it look like a reversal? Because it's been going down pretty hard. And you can see it put in a low, and then afterwards it did a higher low, and it also pushed above the previous resistance right here, and it's sitting above it right now. So if you did enter right now, right here, you would put your stop loss at right around here, which is like a 15% drawdown. Because if it goes back down here, it breaks this support level, there's more sell side pressure, and the uptrend is sort of cancelled for now. It might go up later, but it's cancelled for now. That's how I see it. That's how I look at it. But what happened earlier with Degen? Now, I'm not sure what exactly is going on with this coin. I haven't done any sort of research. I just see it's trending. So you got to keep that in mind as well. I see it's a pretty old coin. It was released back in January. So let's say you were extra late to the party with this coin. You were like, okay, I see it's already released in January. Market cap is sitting already at $10 million. And I see it's going down. Let's imagine we are currently in 24th of February of 2024. And you're like, okay, what's going on here? It is down 86%. Like, when should I buy it in? So we don't see what's going on after the blue line. Let's just imagine that. And when you see those bigger run-ups, you gotta take into account more support levels that are to the downside. You would see it having bounced from a support level which actually perfectly matches the previous support, which was established right before the pump, right? And if it broke below here, the next support levels are right around here at $3 million market cap. Instead of it going up like it did, let's say it went down to this level. What it did next was it did something like this, and then it broke above this resistance level right here. And now you think, okay, this is a confirmation that there's going to be an uptrend probably, and you enter it. What you fail to realize here is that probably there's not going to be any sort of uptrend, only because it's broken below this major support level right here already. And if it's broken below a major support level, you can imagine it in a way that there's sort of a magnet that's pulling it towards the next support level, and there is no support levels between these two levels right here. So it's basically a magnet to the downside. It would probably find the support level at these prices, so you buying in would not be a good choice in that case. So you have to also keep in mind major support levels. But here what happened was it broke, and it sort of confirmed that an uptrend has been established. So what you would have done is you would have entered long already right around here, and you would have seen only a tiny profit for like 20%, and you set your stop loss low enough at 35%, you would have essentially waited it out just a little bit for, how much is that? Yeah, it's actually not a little bit in this case. This is a few days. So if you were to take it a bit more short term, let's just say you take the support level right here, you take a 6% loss on this one, you sell it, you wait for the next uptrend confirmation. You see, okay, it bounces from this support level. Okay, you wait what happens next. Does it go lower? Nope. It goes higher. It breaks this little level right here. You enter long. What happens next is you set your stop loss before, right? You set it where it invalidates this trend upwards. So it would be below this level. That would have been a 60% up from that point. Let's say you take some profits and you just hold it. And it goes back down to this level. And let's say you're like, okay, you know, it's still above this major support level. I'm just going to keep buying it. And you buy another position. And you set that stop loss at that same position. Well, what happened was a pretty huge run of about 60x. That's a pretty good ROI for you if you keep setting your stop losses higher and higher, right? So you buy it in this, for example, in this position. How would you move towards setting those higher stop losses? Now that's another very, very important thing to be looking at. You would essentially be, let's say, at this point, right? At this point, what you would do is you have an open position. So you keep looking at what's going on. Okay, it goes up to this point and it goes down here. So you're like, okay, let's see what happens. It starts moving back upwards and you instantly set the stop loss to this level. It would essentially stop you out. You would sell your position here. It would go up just a little bit more and you would see this dump. But you can keep watching the chart, right? You can keep watching the chart. What's going to happen next? You see this move upwards. That's a pretty big green candle right there, right? So you enter long again. Where do you set your stop loss? Well, you wait until it sort of cools down from that big candle. You see where it goes, right? It starts moving upwards. And you're like, okay, it looks like maybe there's an uptrend. Let's set the stop loss here. And you set the stop loss there and it goes up again. Right, it goes up 20%. Okay, let's see what happens. It goes down 8%, and then it pumps really quickly in a few hours, 50%. Okay, now it's gone 50% up. Where do you set your stop loss now? You don't want to round trip your profits. You don't want to go 10x and then just sell all of your profits, no profit, because you went up and then went down all the way. So you set your stop loss back here. You wait, you know, you're up already from the initial position. You're up already like 100%. So you wait what happens next. You see, okay, it's moving up. It just keeps moving up. You have nowhere basically to set your stop loss. And then it does a sort of 1 hour swing low right here. It swings down and it stays there for a few hours. And then you can see it starts moving up again. What you do in that case is you set the stop loss here. Moves up, stays there for a bit, moves up again, you set the stop loss again a bit higher, right here, just below this level. It moves again higher and even higher. What you do next is you wait for it keeps moving higher and you keep setting your stop loss higher, right? So you wait for that swing high that happens again. Your stop loss at this point should be right around this sort of level. You wait for that swing high come in and for that swing low to come in. And it comes in around here. So again, you don't see anything that's happening right there, right? You don't see it. You just think, okay, what's going to happen now? It can either go back to this stop level, which you would be fine with because you're already in profit, or it can go up. So you wait, what's going to happen? Either it hits it or it goes up. Well, in this case, it went up. It went up pretty huge. It went up like in 3 hours, it went up another 30%. At that point, you know that you're pretty far away from that stop loss. You can easily set it to this level, below this level, because if it goes below this level, once again, as I said, the uptrend technically would be broken, right? I would say that's how I ride these sort of waves. You ride it very cautiously, and you can see here, actually, it had sort of a pretty big retracement right here, which it broke, of course, and it went even on a higher run. This was just a small little run up that it did before the big one, and you would have been stopped out. Right around here, you would have been actually stopped out. So you see on the hourly chart, okay, it does this sort of bottom, and it looks pretty bullish. It's a long wick candle right here. It's sort of there. It means that there's more buying pressure than there is selling pressure. It looks good, right? And it starts moving up. You set the stop loss here, and you get stopped out, which is fine. You are on a profitable position at that point. Now it gets pretty choppy for a while. You would pretty much get stopped out each time. Like here, you would enter and you would get stopped out. Here, you would enter and you wouldn't get stopped out, but you would get stopped out right here again. And you would probably enter long again here, and you would set the stop loss here, and it would go down and hit your stop loss. And then you would incur such losses like 10%, like 15%. But when you catch that next uptrend, it's pretty huge, right? You would enter long right here. This would be one of your last longs to the upside. You would see that it's done a low and then a big green candle, and then it does a bit of a higher consolidation level. So you set your stop loss here below all of these levels. Wait, what happens? And of course it went up pretty huge, and the rest is history. Went up 600 million from that point on. And if you just caught that pump right there, 30x. I hope this helps you with trading for sure. This is how I do it, and obviously everyone has their own trading strategies, but I just wanted to drop some value. Maybe someone finds this valuable. I would very much appreciate it if you let me know in the comments if you find any of this valuable. Also, be sure to check out this sheet right here that I've made, which basically compiles all of the information that I've been talking about. It's basically a summarized version, and if you've watched the video, you would very much find this also very valuable because you could just read through it maybe in 5 minutes and remember it. One more thing I wanted to mention. You're going to be doing the second way of trading, which I just explained, right? If you're going to be trading with these stop losses and all this, I suggest you guys use a bot such as Unibot. For example, this was the only one I could find currently that was like trustworthy. On Unibot, basically you can copy a contract address of a token and you paste it in their message and you can buy it. It's going to be a lot more efficient for you if you're constantly trading and constantly watching the charts. Maybe set your windows in a way where you can see the Unibot window on the left side, for example, like this, and you set your chart on the right side like this, for example. Let me see. And then when you see some sort of a pattern forming, you buy in, right? And you can buy in really quickly. You just paste the contract address, boom, select the ETH you want to put, 0.05 for example, boom, custom amount, send TX, and it's going to make the buy for you really quickly. This is a lot better than going to Uniswap and manually like doing it there. It's like more slow that way. Alright, that's going to be it for the video. If you made it this far, you rock, and I'll see you in the next one.